Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. If you're new to the channel, welcome to the channel. What I'm trying to do is show you guys how I'm building a dividend portfolio. And in this video, I'm going to do a buy. And what I'll do is I'll show you the companies I selected, and I put $20 into each of those companies, and I'll show you the future dividends for those companies as well as historicals on this portfolio, and show you how this dividend income has grown for this portfolio. And this portfolio that I'm showing you right now, this is a taxable M1 stock brokerage account, and I really started contributing to this portfolio in about 2020. I started ramping up my contributions to this portfolio, and the reason was I was trying to build cash flow. I had a really solid foundation of ETFs and a good solid net worth, but I realized with especially with COVID or the Great Recession, you really can't rely on the stock market as far as what it's going to be worth. But I think one thing you can rely on is solid cash flow through dividends, and that's why I started building this portfolio as well. So what we can see here is just overall this portfolio is done quite well from a returns standpoint, and it's also done well as growing cash flow. This portfolio right now on average, it cash flows over $1,000 per month on average, and we'll get more into that. And we can see the money weighted return, it's done quite well, and we can see it's gone up sharply here, and that's because I did some big deposits here when I had some equity in a home I no longer own, and so I deployed that into the portfolio and really jump started it. And I've been modestly putting money into it, but you can see though how the portfolio has still been going way up. We'll look at the last year, and the money weighted return is at 15.54%. We can see how it's climbed up and near all-time highs, and the all-time highs are right here at the end of November and early December. Went down, and you can see we've kind of returned to those, and we've retreated just a little bit back at just over 277 for the portfolio. We can see the dividends over the last year have been 11,627.90, so doing quite well for the dividends generated over the past year. So let's go into the activity log, and we'll see what those buys were. We can see here's the buys right here at 5 of them at $100. And on the second half of the week, what I do is, again, I select 5 different companies, and we put $20 into each of those. In the first part of the week, every Monday morning, I do a $100 deposit as well, and I let M1 do the stock picking. What I mean by that is I deposit $100, and depending on what's underweighted, like for instance, if I were to put $100 in and use auto invest, the first $100 is likely going to go into the ETF slice and go there. Let's see where that's likely to go into the underweighted side. So BST is likely where the next $100 is going to go. We'll see though on Monday where that's going to go, because the market changes and things could change, but that's where it's likely going to go on Monday. But let's get back into where the $100 went into for today in those 5 buys. And first up was Pepsi. So the $20 for Pepsi, that bought 0.13219 of a share, so it's going to be a fractional share, but I'll show you for each of these positions what the next dividend is going to be as a result of these modest $20 per stock buy. It's going to actually increase those, and we'll see what the next dividend is going to be. So Hershey's is next up that I selected. That bought 0.13281 of a share. And then the next one is Yum Brands, which is Taco Bell, KFC, some other brands in that portfolio if you're unfamiliar with Yum. So that bought 0.15312 of a share of Yum. Then next up, Broadcom. If you remember on my Monday video, all of my money went into Broadcom, and I selected Broadcom again because I think Broadcom is a good long-term buy. It's been a good a stock appreciation for me as well. I've more than doubled my money with Broadcom and just with recent investments. So $20 went there in Broadcom. That bought 0.09133. They recently had a stock split as well. And then last up is Waste Management. Kind of I mean, everyone knows who Waste Management is, but they don't really think of them as an investment. But it's been a good investment as far as returns and as their stock appreciation, as well as growing that dividend. Waste Management's just been really good in both of those ways. So the $20 bought me 0.09062 of a share of Waste Management. So we're going to take a look at the current dividends for those positions, and we're going to take a look at what the next dividends are going to be for those positions as well. So I'm going to jump over to my Google Docs spreadsheet, and I'll walk you through it. I'll leave a link below so you can see this spreadsheet, and you're welcome to use it as well to track your own dividend portfolio. And it has the company, the ticker symbol, the share price, which is using a simple Google Finance function, pulling that price live. So we're going to see these numbers change. Here's the average share price I bought into each position. Here are the number of shares of each position that I own. And then here is the current value if I were to sell. Here's the cost basis. Here is my gain or loss, including dividends for each position. Here's my gain or loss in a percentage. Anything above 25% will be in green. Anything from 0 to 25 will be in white. Anything that's a loss for me, like Hershey's, will be in red. Here is the dividend per share. All of my positions are quarterly pairs except for two of them, which are in blue, which are O Realty and BST. You can take a look at like BST, what this pays me every month. Look at the dividend I'm expecting to receive on Saturday morning. And again, this is each and every month. And here is the yield, current yield percentage. Here's the yield on my cost. We take a look at like an Exxon. Here's the current yield for Exxon, but look at the yield on my cost. And the reason is I bought Exxon at a much lower share price at $47.56, since currently at $109, and you can see why that yield on cost is higher. And then here's the pay date. I have everything on the sheet. It's sorted from A to Z. So everything from starting from the oldest to the newest. And let's go down to where we're at right now. We are in, of course, January. And here's the January pairs so far for the month. I've received a sum of $126.38, but we still have that heavy hitter BST and JP Morgan left. But let's take a look at the next dividend. With what I do is I drip the dividends back in. Like for example, for HP, when I received that dividend of $7.39, I reinvested it back into HP, and you can see the next dividend is going to be $7.45, and you can see how they're all higher and so on. And especially with Pepsi, we're going to remember that 1948, that's going to go up because we bought $20 more of Pepsi. But you can see how the next dividend in April, how it's going to be higher. So remember, it was $126.38 that's paid me so far. But in April, let's take a look and see what it's going to pay me by this point. It's going to be $131.91. You see how that works just with those dividend drips and buying these small increments of fractional shares, how it's just going to go up and up and up for my next dividends. So we can see what the next dividend is. I've hard coded in Yum, Hershey's, Waste Management, Broadcom, and then Pepsi. We're just going to have to remember that 1948. We're going to see that go up as I update the sheet with the new fractional shares for those 5 positions. And we can see the dividend that has paid me. I have that highlighted because we're in January. And then we see those next 2, they're going to hit me on Saturday. We can look at the total dividends that have been paid for each position. We can look at just like BST. We can see how this dividend has been going up for me. You click here so we can show all of them. And this is the dividend history of BST for me. My first dividend from BST was 61 cents. And just look at how it's gone up. And the last one was $4.99.19. So I'm going to be getting 503 and a quarter, and it's going to go up and up as I reinvest that dividend back into BST. And of course, same thing will happen with JP Morgan. You can see a little bit of that dividend history there. First dividend $1.22, and the last was $8.05, and we're expecting $8.40, and it just keeps snowballing. And I like that historical to kind of show that. And I also show the last dividend increase for each of these stocks, and some of them have not increased their dividend year over year, and those are marked with a VAR, or variable. In the case of O, though, O Realty or Realty Income, they raise their dividend more than once a year. But for like Digital Realty, it's been a while. It's been over a year since they've raised their dividend. Same with Oracle. Oracle likes to do it about every 2 years. BST, another one. It would be nice if they could raise. It's been at 25 cents for like 3 years now. I would like to see them kick that one up as well. But all the rest of them, though, you can see they raise their dividend every single year, and it is awesome seeing that, how it's just, without me putting in more money, how that dividend is increasing. And here we're going to see the monthly cash flow average, the quarterly and annual, as I update this sheet. And if you're curious, here's my strategy here. I invest $200 into this dividend portfolio every Monday, and I should put Thursday or Friday, and because Fridays are pretty busy for me. So that's why I'm doing this video on Thursday. My dividends are reinvested in the company that paid them. I may be switching that up here soon, and just letting the dividends go into auto invest. We'll see. Leave a comment below what you think I should do. If I should keep on reinvesting dividends in the company that paid them, or if I should let auto invest pick for me on those, especially BST with that big one coming up of over $500. I'd like to see that maybe spread around a little more. But of course, it will increase my next dividends more if it goes all into BST, since it pays a high dividend. And then I have a rule: if that dividend is cut or suspended by a stock, I will sell it. I'm a buy and hold investor. Here's my goals for 2025. Reinvest dividends using auto invest, like I mentioned. I want to get my net worth to be $2 million. I want that the dividend, the average monthly dividend, to be over 12, or $12.50. We're at $1,036.79, and then I'd like to pay off my house and keep doing the 2 buys per week, like this strategy here. So what we're going to do next is we're going to grab some data from M1 so we can update the fractional shares. It's also going to update the average price I paid for those, the new number of shares, and my cost basis. And instead of having to type in those numbers from M1, I actually used to do that. I would type that into the sheet, and I thought, gosh, there's got to be an easier way. So what I did was I created the M1 data tab, and by using VLOOKUPs over here in the dividend portfolio for like the shares for Apple, it's using VLOOKUP, and it's searching on B2, which is the ticker symbol, and it's pulling that data over, and you can see here's the logic it's going to pull from. Of course, Apple, it's not going to change because we did not buy fractional shares of Apple. We're going to go to the Holdings tab, and if you're curious to see what's all in the portfolio, I will leave a link below to my M1 pies. You can see all the positions and the allocation I have for each of those. I'll scroll down just to kind of show you really quickly what's in the portfolio. The largest position is SCHD, which is a very popular dividend paying ETF. If you're lazy and maybe just you want dividends and want to invest in dividends, but you don't want to pick companies, maybe look into SCHD. You could just set it, forget it, and just do that. And I think it would be, at least in my opinion, I'm not I'm not giving do here. I'm really just showing you what I'm doing. But you could absolutely do that and call it a day. Some people criticize me and say, hey, why do you have so many positions? Hey, to me, it's a hobby. I like following this stuff. And hey, it's my money. I can do whatever I want with it. And I seem to be doing quite well. So, and you guys can do whatever you want with your money. And hey, I hope you guys do even better than me. It's not a competition. So again, just showing you what's in this portfolio, really household names, things like Apple and Microsoft. Costco. I have some things in here that are good for growing, as far as the portfolio. I think some people get too fixated on high yields and things like that. Costco does not pay a high yield. It pays a dividend, a nice growing dividend, but that share appreciation is what I'm after with Costco. And I think over time too, that yield on cost for Costco is going to be quite nice. So I have some things that pay a steady dividend now and grow it, pretty consistently, like a McDonald's, but I have growers in there as well, even like an Nvidia in here too, which pays a tiny dividend, but I think maybe over time it will pay more. And so I have a good mixture of growth in here with steady pairs, and I have some positions that pay a higher dividend in here as well. So kind of a mixture of I've got it all, as well as real estate, because that's one thing that SCHD is missing is the REIT exposure. So there's some things that some of these ETFs miss, and maybe I just want a little bit more of a concentration on it as well. And I have covered calls in here as well, generating good income for me as well. And it's done well on appreciation. It's like income and appreciation. Actually, BST has done better for me than SCHD. So I know some people criticize it, having covered call options in there, but I plan on using this to pay a good chunk of my bills. I have it in my taxable because I want to retire early, and I also have it in an IRA as well. So what we're going to do is, after all my rambling, we're going to grab this data here from the M1 holdings tab. I'm going to paste it into that Google Docs spreadsheet, and it's going to automatically change the values for those 5 positions where I bought more shares. It's going to grab the shares, average share price, cost basis, automatically update that for me. So we'll go to the M1 data tab. We just do a pay special. So I could have bought fractional shares of all the positions in my portfolio, and it would update it just as fast. And I'll scroll down, and let's go take a look at the individual positions. Then we'll take a look at the monthly, quarterly, and annual. So we're going to take a look at the next dividend we're going to get for each of these 5 positions. And first up was Yum Brand. So the next dividend in March was going to be $7.27, so now it's going to be $7.37, and we move up in small increments multiple times per week, and it adds up to real money. And we can see how, just take a look at the last dividend from Yum Brand. So $7.23 was going to be $7.27 with the dividend reinvestment there, the drip. But we're going to move to $7.37 with the $20. You can see how it's just gone up from my first dividend of $1.68, and now we're moving to $7.37. So I like to show this to show it's not all done in one step. You can do it in small steps over time and have big results. So here's Hershey's moving from, and these are going to all be in March, middle March. It's going to pay next time from $12.25 to $12.43. And then we see Waste Management from $7.74 to $7.81. And the reason why some of these positions are in green is that dividend is $10 or over. So once Waste Management gets to $10, it'll be in green. So $7.74 to $7.81 for Waste Management. And then Broadcom, we're just moving that one up more, $8.56 to $8.62. We can see, look at the current yields at 1% for Broadcom, but look at my yield on cost, nearly triple that. So that's been a really good grower for me, getting close to that $10 there as well. And then Pepsi, that one's moving from, I wrote it down, from $19.48. It's going to be now $19.66 for Pepsi's next dividend. I believe we covered all of them there. And then let's take a look at the cash flow averages of monthly, quarterly, and annual. So before the $100 deposit, it was at $1,036.79, moving up to $1,036.98. The quarterly is moving from $31.10.95 to $31.10, or actually moving from $31.10.36 to $31.10.95. The annual moving from $12.441.43 to $12.443.72. We're going to take the monthly cash flow average, 1,036.98. We're going to go to the monthly average dividend tracking tab and put that sum over there. And we'll show you some historicals, just things that are moving the needle, the events that move my cash flow average upward. So 1,036.98. We'll scroll all the way to the bottom. Put that in, 1,036.98. And that added 19 cents to the monthly income of the portfolio. And the event was a $100 deposit. We can take a look at other events. Just yesterday, BlackRock had a 2% dividend increase. So this is not money I put in. It's just an event that happened. A small dividend increase from BlackRock added. So every month I'm getting 8 cents more of dividend income just because of that. You can see Kimberly-Clark just on the day before that, the 28th. You can see just every single day, it seems like, or every couple days, there's an event. Whether I'm depositing money or Black Hills, this is more significant. A 4% dividend increase added 35 cents. And then Cisco dividend drip, $100 deposit here. Let's go find something more significant, like the BlackRock BST. That dividend drip, $3.39. That's huge. And so that's why I may be leaning to the next dividend drip with on Saturday. I'll receive these two dividends, and right now the current strategy is to just drip them back in. So it's going to be $3 plus. It's going to change my monthly income if I drip them, but we'll see what I do if I maybe spread the wealth around with BST or not. But again, leave a comment or leave a comment below and let me know what you think, if I should just drip that back into BST or maybe just spread it around into the portfolio with that $500 dividend that's coming up. So we've covered that. Let's go to my total net worth statement and we'll close out the video. Like I said, the M1 portfolio, this is 15% of my current net worth. Again, because of really, I want to generate cash flow, because it really, your freedom comes down to cash flow. And to me, I didn't want to be beholden to what the stock market was doing and to tell me when I can retire or step away from maybe full-time work or get out of corporate America. I wanted my bills to be paid. It really comes down to that. And that's why I wanted to build dividend income there. So anyway, but I have a solid foundation of ETFs at Vanguard with an IRA, a Roth brokerage account, and a taxable account. So I've got right now at about $484,000 over there. Here's my current employer 401k, all in the S&P 500 index fund at $103,000. And then here's an IRA of my prior employment from 1996 pretty much to 2019, and that is valued at $719K. Here's that dividend portfolio we went into depth in at $277. Here's my 1-year emergency fund over at M1. Here's my 6-month emergency fund over at Synchrony. Here is my 2 months pretty much of kind of spending money over there of expenses over at Capital One. Here is my current home value. I went to Zillow this time, which is actually a little bit lower than something I was using. I'd rather do that, be more conservative with that. And then here are my liabilities. Just paid off the balance of my credit card. I don't keep a balance in the credit card and pay interest. But when I was younger, I absolutely did, because when I first was going through college and had student loan debt, and when I was married and paying off debt, we absolutely did pay credit card debt. We had car loans, things like that. Right now, cars paid off, and I pay off my credit cards. And this is my only liability right now, which is my mortgage, which I'd like to get rid of and lower my expenses, where I would get my expenses low enough that pretty much this dividend portfolio pays for all of my expenses. And that's the dream. That's what I'm trying to do. And so I don't sell shares of my investments. So here's my total net worth, subtracting out any liabilities there. And here is the breakdown with stocks in my home equity and cash. Here is the breakdown in pre-tax and after-tax, and I have more freedom here and over here because pre-tax, I really can't access that without penalty. I know there's tricks and ways of doing it, but for the most part, it's difficult to do. So that is one mistake. I wish I would have built up a taxable brokerage account sooner than I did. Of course, the con to that is you have a tax liability with that, but hey, you can use the dividends usually, or part of the dividends, to pay off your tax liability. As long as you're not selling things, it's the only capital gain or any tax liability you're going to have is on the dividends. So you can maybe hold back some of the dividends. And right now, what I'm doing is I'm cash flowing the taxes on these dividends, and one of these years I'm going to probably start holding that back, and especially from the dividend portfolio in M1, because it is significant. It's going to be over $12,000 a year of just taxable income there. So I'm going to have to start holding back some of those dividends to pay that. So we can see net worth, we're over 1.8, but it keeps bouncing up and down. Not long ago it was at 1.7, and we're back in the 1.8. Who knows where it's going? But you can just see historically, though, from November 2022, how far I've come with that. And it's not because of a windfall. I'm just doing the same thing and not having a huge gap either with my expenses and my W2 job at all. And I don't make hardly any money doing YouTube. I'm not trying to sell you guys anything. No sponsors. Not trying to get you guys to buy stuff, no merch, nothing like that. I'm just purely trying to show you guys what I'm doing so you can do it and actually do it better, do it sooner, and have a higher net worth than I've got. That's my hope for all of you, to actually outdo what I'm doing. So anyway, enough of that. Just wanted to show you guys what I bought, and just the progress with the portfolio. Again, if you missed it, again, these are my selections. I chose to buy some Pepsi, Hershey's, Yum, Broadcom, and Waste Management. Let me know in the comments below what you guys are buying to close out the week. And thanks you guys for watching these videos. It means the world to me when you guys watch these and click the like button. That helps me out a lot and gets the word out on dividend growth investing. So thanks you guys for sticking to the end of the video. If you got value from it, of course, click the like button, subscribe so you do not miss future videos. In my next video, I'm going to recap all of my dividends from the month of January. Great month, and of course it beat the dividends from last January, so I'll go through those one by one, show you the proof in M1. A lot of people just like to read from a spreadsheet. They don't provide you the proof. I show you the proof that I've received these dividends, and of course you know what I do with them. I reinvest them back in to that stock. So thanks again, everyone. I hope you have a great rest of your week, and everybody take care.